Welcome to the Accounting Superstar channel, the place to learn accounting. I'm Professor Don Bush. I've been teaching accounting for about 30 years and been a CPA for about that long. Also, I've got great ways to explain it. You will understand it. Today's lesson is about consignment sales. It's really very easy. Today I'm wearing an Armani sport coat, and I looked on the internet to see how much these things sell for. And they go anywhere from about $1,000 to $2,000. But I didn't pay that much money. I bought it at a consignment shop. So what's a consignment shop? Somebody brought this Armani sport coat into the consignment shop, and the consignment shop sold this sport coat to me on behalf of the seller. And I only paid $94 for it. So sometimes consignment can be a great way to go if you want to get some good quality things at a good price. So on to the lesson for today, consignment sales. So we're talking about Fred's snowblower service. Fred owns a snowblower service repair shop up in Breckenridge, Colorado. Fred, the consignee, will oftentimes sell used snowblowers for other people, the consignors. So Fred accepts snowblowers from other people, so he is the consignee, and he's going to do his best to sell these snowblowers for the other people. And the other people, the owners of the snowblowers, are called the consignors. Now, Fred never owns the consigned snowblowers, but provides a service to the consignors. That service is selling the snowblowers. Sometimes Fred repairs and advertises the consigned snowblowers as part of the sale. And Fred receives a 30% commission on the sales price and is reimbursed for expenses. So Fred is going to receive a 30% commission on the gross sales price. In addition to that, Fred is going to be reimbursed for repairs and advertising to get these snowblowers sold. The number of snowblowers received on consignment, well, Fred has received 5 snowblowers to date. Consignment snowblower repairs and advertising, Fred has spent a total of $500 repairing these snowblowers and advertising them. The total amount of consignment snowblower sales is $4,000 for this year. Fred sold those 5 snowblowers and received about $800 each for them, for a grand total of $4,000. So let's go down to the journal entries. The journal entries are very straightforward. There's only 4 journal entries, and the first journal entry is the easiest of them all. Journal entry number 1, acceptance of consigned snowblowers. Well, there's no entry, and the reason for that is Fred does not own those snowblowers. He did not buy those snowblowers, so there is no entry. Fred is not obligated to the snowblower owners. Entry number 2, receivable from consignors. If you recall, Fred spent $500 repairing and advertising those consigned snowblowers. He spent $500 cash. That's why we're crediting cash. And Fred will be paid back by the consignors for this. So it's a receivable from the consignors. Entry number 3, Fred sells the snowblowers. And this is the entry where if students are going to make a mistake, this is the entry to make the mistake on. So Fred receives $4,000 for selling those snowblowers to customers, and he is not going to credit sales. I put it in bright red here, not sales. Do not credit sales, but rather credit payable to consignors, because Fred owes this money to the consignors. The consignors are the people who own the snowblowers. Fred never owned the snowblowers. He simply sold them on behalf of the owners. Entry number 4, $4,000 was owed to the consignors, but Fred is withholding $500 for the repairs and advertising, and Fred is withholding $1,200 for his commission, which leaves a balance that is paid to the consignors of $2,300. Taking a look at a partial income statement, Fred is not recording sales revenue, but rather Fred is recording commission revenue for $1,200, not $4,000, but $1,200. That is the amount of commission that he earned. And there's no cost of goods sold listed here because Fred never owned those snowblowers. He never bought them. He never had ownership or title of the snowblowers. The consignors always own those snowblowers. And he's not recording any expenses related to the consignment either. Down to the balance sheet. Since Fred squared everything away with the consignors, there is no receivable from the consignors. The consignors reimbursed Fred for his repairs and advertising. Payable to the consignors. There's nothing payable to the consignors because Fred squared everything up with the consignors. He paid the consignors the $2,300 that they were entitled to. Fred would never ever record consigned goods as inventory, and I wrote this down in red. Consigned goods is not recorded as inventory because Fred does not own the inventory. He never bought it, never owned it, so there's no inventory recorded, which is really a great advantage for Fred. Fred can have an inventory to sell but not have to pay for it. It's quite a good deal. And so everybody, that is how we account for consigned goods. Pretty straightforward. If you like this video, well, hit the subscribe button, hit the like button, and we'll see you next time. Over and out.